This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks start the week in the green as investors await a US inflation print that could be the key to the next Fed rate decision. Israel says a deadly strike on a school in Gaza City was aimed at a Hamas command and control centre. Hamas, meanwhile, is calling on mediators to come up with an implementation plan instead of more ceasefire talks. Plus, we discuss the challenges in Saudi Arabia facing in its ambitions to become a top global tourist destination. Stay tuned for this week's Mideast Money segment. Well, it's just gone 8 a.m. across the Emirates. I'm Lizzie Burden in Dubai, in for Jemana Basechi. Welcome to a new week. It really was quite a wild ride last week. Lots of volatility. So the question is, does that volatility continue this week? As I say, we've got economic data out of the US to watch out for, especially that CPI print on Wednesday. Traders braced for volatility, but we've also got key data coming out of the UK, crucial for the Bank of England's decision on when to cut rates again. And on the earnings front, we get UBS results on Wednesday. So we'll have full coverage of all of that for you throughout the week. But let's just check in on how markets are faring at the moment. You've got futures pretty flat stateside, pointing higher in Europe. Treasuries closed currently because of the holiday in Japan. So we look to the futures picture unchanged at the moment, and Brent just shy of $80 a barrel as we keep an eye on the geopolitical situation. But if we dive a little deeper into the US macro picture, and if thinking about whether we're actually going to get an emergency cut out of the Fed, that was a question last week off the back of that eco data. But if you look at the pricing for the meetings for the rest of the year, actually you can see that that is not what's expected. Traders do see a good chance of a jumbo cut, though, for September. That's 50% priced, notably. And we're going to discuss all of this more in a moment with Nomura's Gareth Nicholson. But first, let's dive a little deeper into what's happening in Asian markets. Avril Hong's on standby for us in Singapore. Avril, what's happening where you are?
Yeah, Lizzie, we're seeing Asia stocks gaining ground for a second session, and it looks like a semblance of calm is falling into markets. After last week, as you say, it was a wild one. We saw that heavy selling at the start of the week and then a rebound towards the end. We are seeing Japan markets close today, so that might help to cap some of the volatility we might be seeing in the FX space in terms of the dollar yen, but we are also keeping a close watch, not just out of data from the US this week or the UK, but Japan as well is set to release Q2 GDP numbers. We could see a return to growth after it slipped in the first quarter, and it's something that could reinforce in a way that hawkish stance that we got from the Bank of Japan not so long ago. And in terms of some of the sectors we're keeping an eye on as well are the stocks that are tied to the AI narrative. TAIEX is the one that's outperforming. This is, of course, after TSMC sales for July showed a surge. Lizzie.
All right, Avril Hong in Singapore, we thank you. I like this calm to start the week. But let's look ahead now to the data that we're getting on Wednesday out of the US. It's CPI, of course. We've been digesting, as you say, Avril, this wild week of swings that brought the VIX to levels not seen since the height of the pandemic. The Fed Governor Michelle Bowman says that while, quote, inflation is still uncomfortably above the committee's 2% goal, she remains cautious. And meanwhile, the former Treasury Secretary Larry Summers says that any emergency Fed rate cut would be unwarranted as stocks eased following a global sell-off.
I think an emergency response would be lurching, panicked, overheated, and counterproductive on current facts, which doesn't mean that the Fed shouldn't be watching very closely.
So let's discuss further with our first guest of the morning, Gareth Nicholson, Nomura International Wealth Management CEO and Managed Investments Head. Welcome to the programme, Gareth. You heard Larry Summers there. He says an emergency cut would be unwarranted. Do you agree?
I don't really want to disagree with Larry Summers. He is an expert, but the facts point to the similar sort of thing, Lizzie. You have the last time we had emergency rate cuts, 3 in a row, was 2001. It was the dot-com era kind of recession. That's when we had 50, 50, 50, 3 consecutive cuts. Even the GFC, we had 2 jumbo cuts, 50, 50, then 25. I mean, the beginning of last week or the middle of last week, we had, rate expectations somewhere between those two. And the market doesn't feel like we're somewhere between the 2001 recession and the great financial crisis. We think a jumbo rate cut here would be overdone. We think the market is much more aligned with 3 consecutive 25 rate cuts. This still shows that the direction of the Fed is still dovish. It shows that they're looking to support the economy. There are cracks growing, but this isn't an emergency yet.
So let's say that the Fed doesn't make an emergency cut, it doesn't make a jumbo cut, but the cuts that are priced happen. Does it actually have a potential to lead to more turbulence in the market than actually saving the market, given the volatility that we've already seen? How worried are you about that sort of scenario?
Well, Lizzie, I think it's going to be the case very much like we had before this big panic last week was if we have an extended period of stability, then it breeds instability. Traders get edgy. They start looking for any small little factor that change. And be honest, what changed last week was really the BOJ and the labour market's been a bit weaker than most expected. If we now have a number of prints that people are watching closely going into September, which we do, we think the market is going to be a little bit more on edge, but at the same time not look to do a knee-jerk reaction. So we think there's going to be volatility, but it's going to be a much more measured pace, where the Fed is pricing in a slowdown and the market will come to that fact as well and not expect a huge recession.
And so amid all of this, where are the havens for you?
For the havens, well, I think that's where we're looking now at which areas are going to be able to withstand, a slightly stronger yen, for instance, a weaker dollar, places where you're going to see interest rates start cutting at a gradual pace. So for us, some of the places that we have worries about would be credit. We still think credit is going to feel some pain. Places that we like, we're starting to see value again in Japan. We do believe that buying the dip in Japan, this crash was overdone, and there's a number of factors supporting getting into Japanese equity. You've seen a lot of local investors that were investing abroad, taking that money out, now looking at spending their tax incentive investment plans back at home. We're seeing a lot of investors that missed their initial boat in Japan, looking at the headlines and saying, well, the earnings numbers were pretty strong. Everything but retail sales were actually up. So there is still a case for Japan, and we think as a diversifier out of a huge overweight in US, that is a nice play, alongside places like India, which again has long-term tailwinds.
And of course, here in the Middle East, we're thinking about the geopolitical tensions rumbling on in the background. How much does that create a risk-off mood to you?
Well, I think particularly given that people want to, one, they're building up their portfolio. Yes, it's nice to have the equity risk and it pays off over the long term. We still want to have that income. And that's why a lot of Middle East clients have had a lot of deposits, a lot of cash, having that stability at 5.5%. But with rates coming down, we think a lot of those investors are going to still want that income. They still want that stability, given the uncertainty in the region and globally, and will start moving into fixed income. We think 10 years at near 4%, 5 years is even more attractive. But locking in some income for 5 to 10 years at these attractive rates is very attractive. And we're seeing a lot of our Middle East clients move in that way.
OK, really interesting. Just finally, Gareth, I know you've been looking at the UK recently. We've had the Bank of England finally cutting rates, a bit of relative political stability. Is it time to start buying UK equities?
I think UK's become exciting again. As you said, the politics seems to be a lot more clear than maybe in the US, than in Europe. We think there is a big job ahead, but they have made big steps to move in that direction. And when people are looking for a traditional safe haven, the UK, over the very long term, has been that. And we think there will be money leaving the US. There will be money not going back into Europe and Japan. And potentially the underweight that many investors have had with regards to the UK will get filled. So yes, we think there's definitely flow to go to the UK.
OK, really interesting. Gareth Nicholson with an optimistic view on the UK. We thank you. That's Gareth Nicholson, Nomura International Wealth Management CIO and Managed Investments Head. Now, we have had some breaking earnings across the terminal. This is from Adnoc, the Abu Dhabi-based oil and gas company. Of course, they have announced that for the second quarter, EBITDA was up 18% year-on-year at $2.09 billion. For second quarter revenue, it came in at $6 billion, so a real beat on the estimate of $1.15 billion. Second quarter net income, $1.19 billion, so that's up 21% year-on-year. And they have proposed an 8.1 Phil's share dividend for the first half. So those are the latest results from Adnoc. And we're going to be speaking to the CFO of Adnoc, Peter van Driel, about those numbers at 8:40 a.m. Just clarifying that the second quarter revenue was $6.08 billion. That's up 13% year on year. We'll break it all down with Peter later in the programme. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, new polling by the New York Times suggests that US Vice President Kamala Harris has opened a narrow lead on the Republican opponent, Donald Trump, in 3 battleground states. For more, let's bring in Bloomberg's Derek Wallbank. Now, Derek, this polling is really interesting. You've got Kamala Harris leading Trump in 3 swing states, and yet Trump more trusted on the economy. How much do you read into these polling results?
Well, Lizzie, I'll tell you what I'm looking at is I'm looking at trend lines. And this is the best poll among the top ranked pollsters in the United States that we've seen for Kamala Harris yet since she's become the prospective Democratic nominee, right? You've got these 3 key battleground states of Wisconsin, Pennsylvania, and Michigan, states I know very, very well. And realistically, the simple math is this. In that election, if a Democratic nominee wins those 3 states, keeps all of the rest of the states that they're expected to win otherwise, that's it. That's the ball game, right? So that is a full path to the White House. And Harris is opening up a small lead according to that survey. Now, I've seen others that suggest that the race may be closer to tied. So, and we've got a long time between now and then. So all of the appropriate skepticism. But it does suggest, Lizzie, that the U.S. presidential race is in a very different place than it was this time 3-4 weeks ago, right? Kamala Harris has breathed in a different life into the campaign. She's knocked Donald Trump a little bit off guard. He hasn't really had this same ability to kind of go at her the way that he did at Joe Biden. His numbers have slipped down. You're seeing that Harris in some surveys is outpacing Trump in terms of who voters trust with the economy. You're seeing an increase in fundraising. The rollout of Tim Walz as the VP pick has been far more positively received by voters than the rollout of J.D. Vance as the Republican pick. All in all, it's been a very good 3 weeks for Harris. Now, will it stay that way? No. There will be trips coming up. There will be, stumbles, I'm sure, and uncertain events coming up. But so far, this rollout has gone probably about as well as Kamala Harris could have expected it. And you see this actually in market things as well, including prediction markets, but also a little bit of an ease off in the Trump trade over the last, month or so.
Yeah, indeed, and we're just showing it there on the screen how Harris is actually doing better than Biden ever did when it comes to betting odds of winning this election. But let's think about how it turns into dollars, the fundraising picture. Of course, Harris has been on this critical campaign stretch with her newly announced running mate. How's that going? How's it doing in comparison to Donald Trump in terms of fundraising?
Well, it's interesting you asked that because Donald Trump was doing quite well in fundraising compared to Joe Biden. And again, let's look at these trend analysis. Joe Biden's money was drying up. Top fundraisers had said that they were going to hold off until he made a decision to exit the race. He does that. Harris jumps in and she records some of the best fundraising totals day on day of the cycle so far. Now she goes off on this fundraising swing and swing state rally swing. They've seen crowds that are larger than Joe Biden was getting. She just had somewhere around a $12 million event event in San Francisco, in her home area. And all of that is to say, Lizzie, that you're going to be looking at this Democratic campaign with resources that it wouldn't have had Joe Biden been the nominee, because Harris went out and put somewhere in the order of $200 million plus into this campaign in the last couple of weeks. That is a lot of money, and she's going to have the resources she needs to do kind of whatever she wants over the next 90 days of this campaign. And that's really the critical thing. Do you have the tools to do the job you want to do? She does at this point.
OK, really interesting. Bloomberg's Derek Wallbank, we thank you. As we look ahead to a debate, an interview, in fact, on X by Elon Musk of Donald Trump later today. But good to talk to you, Derek. Now, I want to go from the politics to the geopolitics right here in the Middle East. Israel's military says a deadly strike on a school in Gaza that drew international condemnation was aimed at Hamas command and control centre. Hamas authorities in Gaza estimate that 100 people were killed in Saturday's missile attack, but the figures couldn't be independently verified. So let's get more now from our reporter in Jerusalem, Dan Williams. Dan, has the international response to the strike given Israel pause?
I'm not sure it has. This is just another fiercely disputed event in a war that's now over 10 months old. And Israel was quite fast to come out with what it saw as arguments rebutting the allegations that this was a civilian target, a high casualty event among civilians. Israel says the target was in fact a command center for Hamas and Islamic Jihad ensconced within what was meant to be a civilian site, a site for displaced Palestinians. It actually named what it said were 19 dead operatives of those two groups. It also says another leader of Islamic Jihad is believed to have been there, presumably yet to be confirmed to be among the casualties. It also says that the number cited by authorities in Gaza for the number of dead is inconsistent with the munitions it used. It said it used 3 precision bombs on a specific part of this complex. And it doesn't seem to have been especially fazed by this criticism that actually went as high up as the US Vice President's senior aide, national security advisor. He wasn't really critical, but he did repeat caution on Israel to avoid civilian casualties. So certainly this event has already affected the nominee for the Democratic Party and potentially the next president of the United States.
All right, Dan Williams in Jerusalem, we thank you for bringing us the latest on the situation there. Now, for a look at some of the other stories that we're following this morning, Ukraine's president says that Russian troops have started a fire at an occupied nuclear power plant, calling on the world and the International Atomic Energy Agency to react. Volodymyr Zelensky said in a post on X late on Sunday that radiation levels were within a normal range. Earlier, Zelensky called on allies to allow Kyiv to strike deep within Russian territory as Moscow hit back with missile strikes following last week's cross-border incursion by Ukrainian forces. Well, coming up on the programme, we're going to focus on Ghana's growth as Africa's top gold producer opens a new refinery to reap value from its natural resources. We'll bring you that conversation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, Africa's biggest gold producer, Ghana, has opened a new refinery plant. The West African nation aims to refine 400 kilograms of gold a day, sourcing the raw material mainly from small-scale mines. The government holds a 20% stake in the public-private partnership with Rosie Royal Minerals of India. And we can get more now from Bloomberg's Ondiro Oganga, who joins us from Kigali. Ondiro, good morning. What's the likely upside of this new development?
Lizzie, a couple of things stand out from this deal. One of them being it will be easier for the central bank to source for gold. Initially, they had to buy it from outside, but this deal brings refined gold right to their doorstep. It will make it easier for them to build up their gold reserves, to be able to show up their FX. Another added advantage is we have to remember that Ghana is among the top 10 gold producers in the world. So by adding value, they'll be able to tap into that market that they had not tapped into before and reap bigger benefits. But at the core of this deal is formalization of artisanal mining, which accounts for about a third of the total gold output, but is marred by irregularities such as illegal mining. So by formalizing it, they're offering them a ready market. And also the central bank has been doing this for quite a while, since 2021, and they've bought gold worth $5 billion. Important to note, though, long short, they're looking to get certified by the London Bullion Market Association, but there are a couple of issues that they'll have to address in their value chain, including child labor.
OK, so really interesting that you mentioned the currency, because gold could also be used as an anchor for the local currency if the vice president wins the election. So just tell us more about that.
I like that you put "if they." This is a statement that was said during the campaign trail. Politicians overpromise and then deliver when their terms come. But it's also important to know that the Ghanaian currency has gone through a lot. At the peak of the tumble, it lost 60% of its value. Inflation was at 54%. And even though things have cooled down, the currency this year has lost nearly 23% of its value, affecting the cost of basic goods and services. And so if President, or rather Vice President Bawumia becomes president during the general elections that will be held in December, then Ghana will be joining countries like Zimbabwe that recently transitioned to ZiG after their currency lost 80% of its value.
All right, Ondiro Oganga, we thank you for bringing us that story. Now, for another look at some of the other stories we're following this morning, Zambia has temporarily shut the borders with the Democratic Republic of Congo in a move that may delay copper exports from Africa's biggest producer. The state broadcaster ZNBC says that the move follows protests across the DRC over the government's decision to ban certain beverage imports from Zambia. Most of Congo's copper travels through Zambia to reach regional ports. Well, just checking in on these markets, we have futures stateside pretty flat, actually, but for Nasdaq futures, ever so slightly higher, a tenth of a percent higher. But here in the European picture, futures pointing higher by 0.5%. Relatively quiet compared to last week as things stand, but that may not hold when we get more of the data out this week. We've got US CPI on Wednesday, we've got a raft of UK data, and of course we'll bring you full coverage of all of that throughout the week. But right here on the programme next, we're going to be discussing Saudi Arabia's ambitions to become a top tourism destination. Anita Mendiratta joins us next in her capacity as advisor to the CEO of Saudi Tourism. We'll bring you that conversation next. Big ambitions, but do they have the connectivity to back them up? So stay with us. This is Bloomberg. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks start the week in the green as investors await a US inflation print that could be the key to the next Fed rate decision. Israel says a deadly strike on a school in Gaza City was aimed at Hamas Command and Control Center. Hamas, meanwhile, is calling on mediators to come up with an implementation plan instead of more ceasefire talks. Plus, we discuss the challenges Saudi Arabia faces in its ambitions to become a top global tourist destination. Stay tuned for this week's Mideast Money segment. It's just gone 8:30 a.m. across the Emirates. Welcome to the programme. I'm Lizzie Verdon in Dubai. Well, it was a wild week last week for markets. Does that volatility continue this week? You're looking at a pretty calm picture in markets at the moment, but after the CPI print out of the US on Wednesday, you are looking at potentially even more volatility this week. We also get key data out of the UK, which will be crucial, of course, for the Bank of England in deciding when it's going to cut rates again. And on the earnings front, we're not done yet. We'll have results from UBS on Wednesday. So we'll have full coverage of all of that throughout the week. But as things stand, you've got US futures flat currently, European futures pointing to a higher opening when we get there. You have Treasuries and the futures picture pretty flat as well, and Brent trading just shy of $80 a barrel as we await those reports from OPEC and the IEA and traders digest the geopolitical tensions. Just looking to the chart there currently, you can see that we've had lots of questions about whether the Fed's going to do an emergency rate cut, a jumbo rate cut. We were discussing this with Gareth Nicholson earlier, but markets aren't pricing any intermeeting cuts. You can see this here. You're looking at the number of cuts priced for the 2 months without Fed meetings. So this is August and October. What markets do see, though, is a good chance of a jumbo cut for September. So that's 50% priced. And we will see whether this picture changes after the eco data that we get this week. But let's check in now on how markets are faring in Asia. Avril Hong is on standby for us in Singapore. Avril, what's happening where you are?
Yeah, Lizzie, it's another gain for Asia stocks following on from already the rebound that we saw late last week. And this is as markets look forward to this big week for US data, but perhaps more importantly for the Asia Pacific, how we see Q2 GDP in Japan and whether we get that pickup, as is the consensus from economists. Remember, Japan's economy slipped into contraction in the first quarter. So all eyes will be on whether the data kind of vindicates the BOJ's hawkish rate hike. And we are also seeing the Taiwan markets coming under a lot of focus. The rebound that you're seeing today is led by the benchmark heavyweights such as Hon Hai and TSMC. TSMC is doing well because of that sales surge from July. But for the likes of Hon Hai, as we expect its earnings to show it benefiting from that AI boom. So these are some of the stocks that we're watching in Taiwan as well. Lizzie.
All right, Avril Hong in Singapore, we thank you for that update. Now, let's come back to the Middle East. Saudi Arabia has announced new business regulations aimed at boosting transparency and easing the process of investing in the kingdom. The Ministry of Investment says that the updated investment law enhances investor rights by guaranteeing the rule of law, fair treatment, and the freedom to transfer funds without delay. The kingdom has taken several steps in recent years to attract foreign business, as it looks to bring in more than $100 billion in foreign direct investment a year by 2030. So that's FDI, but Saudi Arabia is also betting on tourism as part of a wider strategy to transform the economy. The kingdom is looking to attract around 150 million tourists a year by 2030, with almost half to come from overseas. It's a steep climb from the 27 million foreign arrivals in 2023, but if achieved, these lofty ambitions would catapult Saudi to the top of the ranks for the most visited nation globally. By comparison, France closed in on 100 million tourists in 2023. And while Saudi Arabia ploughs on with its plans, the question really is, will the tourists come? So who better to discuss than Anita Mendiratta, Special Advisor to the Secretary General at the United Nations Tourism and Special Advisor to the CEO of Saudi Tourism. Anita, lovely to have you with me. We're really familiar with Saudi's ambitions when it comes to tourism. As I say, the question is whether those tourists are going to come, and part of the challenge is connectivity. How big an issue do you think it is getting around the country?
It's a great challenge, and Lizzie, thank you for having me, and thank you for putting this in the spotlight. I think importantly, and just rewinding slightly, when you mentioned the ambitions of Saudi to have 150 million tourists by 2030, we need to keep in mind their original ambition as part of Vision 2030 was 100 million. They reached that last year. They actually went to 106. So 7 years ahead of schedule, they've actually achieved their Vision 2030 target, and they've done that through especially interconnectivity. Now, the interconnectivity is by air, it's by land, it's by sea with cruise, and it's by rail. It's also interconnectivity psychologically and making sure that there's an invitation to the world for everyone to actually come and visit. They're investing heavily. They're making sure that especially air connectivity is happening at a step change level, both in terms of international interconnectivity and domestic, to make sure that people can travel easily within the kingdom itself. And very much focusing not just on the usual international destinations for connections, but the GCC, which is the dominant amount of the travelers that actually come to the kingdom.
So it's a fast pace of change, but of course this is a competition. You're competing with destinations like the Maldives. I could go there and it's hot and it's easy to get around. How do you beat the competition?
By being smart, by being united, and by having leadership excellence. And that's where I can genuinely say I've had the blessing of working with Saudi since 2018, just a year before they opened up to the world. And that was in an advisory board role within Alula, which is one of the giga projects of Vision 2030. And since the beginning, they have been very focused, yes, investing in the hardware, the giga projects, accommodation, airports, airlines, but also the software in human capital development, because they want to make sure that visitors to the kingdom are enjoying international standards, but Saudi style. And the CEO of Saudi Tourism, Fahad Hamiduddin, is always very clear in making sure that people understand it's Saudi tourism development for the better of the Saudis, not just for the better of the tourism experience. And that means the Saudi community being proud to be hosts, being a part of the tourism economy, and feeling that they are shaping their future through tourism development aligned to Vision 2030. So it's a call to action for all Saudis to participate in the sector, and it's a call to leadership for all people in tourism. And they're answering that call with fortitude, with focus, and absolutely with unity towards Vision 2030.
So how do you see the split of foreign and local tourists weighing up in the years to come?
You've made something very, very important. I think you're a tourism practitioner underneath being a great global broadcaster. Every destination around the world focuses on international tourists, absolutely. But international tourists, yes, they're important in terms of revenues and arrivals and international reputation. But domestic and regional tourist is always the backbone, because that's where you need to get repeat visitation, dispersion around the destination, and ultimately making sure that you have a tourism economy that's year-round, not that's only focused on holiday periods. Otherwise, you're actually institutionalizing seasonality and institutionalizing labor challenges. So what Saudi is doing is focusing on making sure that the Saudis feel very much welcome to explore their own country. Likewise, people of the region. So when they reached 106 million, so again, exceeding that Vision 2030 target 7 years in advance, they did that not just by 106 million international, 80% were domestic and regional tourists. And they celebrate those tourists as much as they celebrate the international. And that is important for any smart destination to really build a solid tourism economy.
I just want to come back to this question of connectivity, because it's really going to make or break Saudi's tourism goals. When you have the insight that you do, Anita, and you're so close to the leadership here, I wonder what they're prioritising. Is it hotels? Is it flight paths? Is it big projects? What's top of the list?
Yes and yes and yes to your three questions around what exactly is it. Accommodation must be there, but accommodation doesn't work unless you have accessibility, and that's very much, again, through airports and airlines. We know that Riyadh Air has just been announced. It's coming into the skies in 2025, and it's aiming at 100 million passengers by 2030. So that's going to step change the way in which Saudia, for instance, and the other Saudi aircraft and airlines can be able to support the destination. But they're also working with regional carriers, so making sure you have the regional hops, but again, very much domestic. So aviation is a fundamental part of the growth strategy of Saudi, and they are absolutely making sure that's in place. Importantly, the kingdom is quite unique in that it's focusing on the, dare I say, Lizzie, the non-sexy stuff. So looking at core infrastructure when it comes to aviation, human capital development, they have the giga projects and all the all-factor initiatives. But when you really look at the foundations of a smart destination, which is a smart visitor economy, and therefore a community of citizens that are proud to be hosts, Saudi is doing it the right way. They're creating institutions, universities, the Alula Academy, centers of excellence in frontline training. Again, world-class standards, Saudi style.
But you mentioned the lingering perceptions about Saudi Arabia and how that presents an issue. How much is it about changing the image of Saudi Arabia, and how much is it about actually changing the culture?
It's both, and they work hand in hand. And I think this is where what's important, and this is where the kingdom's very understanding, and the leadership is very honest in saying the world is watching. The world is looking to see, are we serious? There's only so much one can say to convince. Watch the actions. Look at the proof of delivery. Are women involved in the industry? Are they being celebrated? Are they given freedoms? Absolutely. Again, I joined the kingdom in terms of the advisory board back in 2018. This is when Vision 2030 was just opening up and confidence was not yet there from the world that they were serious. I now go and I'm asked why I'm wearing my abaya. I do so purely because I'm there in my UN role. And so out of respect, especially to the local communities in Alula, I'll wear my abaya. But the Saudi women who are walking around absolutely gorgeous in all of their international brands, proud of who they are and feeling celebrated, recognize this is their time. You can't have that much consistent transformation if it's not real. This is real. And right now, the world needs inspiration. It needs proof of an environment, a community, a place in the world that is really focusing on the future and wants the world to be a part of it, which is why they're bringing in international investors, international hotel brands, international expats, is a reflection of the fact that this is Saudi doing it with the world, not just for Saudi.
All right. Anita Mendiratta, Special Advisor to the Secretary General at United Nations Tourism and Special Advisor to the CEO of Saudi Tourism. Lovely to have you on the programme with me. Thank you. Well, for more of these stories looking into the intersection of wealth and power in the region, do sign up to our Mideast Money newsletter. You'll find it at bloomberg.com/newsletters. Coming up on this programme, Adnoc Gas reports its second quarter earnings, and we're going to speak to the company's CFO on the unit's expansion plans. So that conversation with Peter Van Driel coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, Adnoc Gas has reported its earnings this morning. Second quarter net income almost $1.2 billion. That's up 21% year on year, driven by stronger domestic gas growth. Second quarter revenue came in at $6 billion, up 13% year on year. And Adnoc Gas's CFO, Peter Van Driel, joins me now. Welcome to the programme, Peter. Good to have you with me. Do you want to just talk me through how you think the business has been doing in the first half of the year?
Yeah, I mean, I can summarise it as a very strong, robust quarter. As you said, $6 billion of revenue. That's the third time in a row. Profitability, 21% up. And this all is on the back of stronger sales in the UAE, where we see a strong growth of the economy, and we benefit from that. We see an improvement in terms of volumes, but also in terms of margins. Margins were up in the Q-on-Q by 13%. And that demonstrates that the economy in the UAE is strong, it's growing, population growth, and Adnoc Gas will continue to benefit from that growth.
So given that performance, are there plans to list more of the company's shares or perhaps go for a dual listing?
Ultimately, I cannot have a clear view on that. I would love it, but it's not my decision. It's the shareholder Adnoc who has to make this decision. After all, they are the owner who would, in such a case, list their shares.
OK, well, is Adnoc Gas going to continue to focus exclusively on the UAE? Maybe you could tell me that, or are you going to look to participate in other projects overseas?
I mean, for us, it's very important not just to deliver secure supply to our customers in the UAE, but 2/3 of our revenues come from international sales. Think about LPG, but also LNG, liquefied natural gas. We supply LNG at the moment close to 6 MTPA to destinations around the world, in particular the Far East and Central Asia. Our portfolio is growing, and of course you've heard the news that Ruwais LNG has taken FID, and we have also been able, Adnoc has been able to announce shareholders that participate in the venture, and ultimately Ruwais LNG will be part of our portfolio. That means we will add another 9.6 MTPA to our LNG export portfolio. So yes, Lizzie, to your question, it is domestic important, but international sales are equally of great interest for us, given that 2/3 of our revenue come from those international sales.
OK, and then how's Adnoc Gas preparing for the end of the current gas supply contract with Qatar via the Dolphin pipeline?
Adnoc Gas does not have such a contract. We supply 60% of all the gas needs in the UAE, and I can't comment on what Qatar is doing, to be honest. We are the sole supplier of gas, raw gas, that is produced in Adnoc. We process it, or we liquefy it and export it.
And do you want to just talk to me about the broader market dynamics, global growth versus domestic growth?
At the moment, I believe that we are really in a good position where we see growth in the UAE economy. But equally, if we look in particular to LNG, we see huge demand for our LNG products. It is not only long-term contracts, but also short-term remains strong. We are well positioned, of course, because we can have our short-term cargoes either going to the west, to Europe, to Germany, for example, or on an opportunistic basis, we can send our cargoes to the east. And that can be even the Far East, that can be Central Asia. There are many markets that are upcoming and really start to convert to an import of LNG market. And as I said, we are well located and we make use of that growth in the LNG market worldwide. We have seen strength in the market. We have been able to secure for Ruwais LNG the majority of the contracts. So we're quite comfortable with our LNG position.
All right, Adnoc Gas CFO Peter van Driel, we thank you for joining us. And just a reminder of those earnings out of Abu Dhabi, you had double-digit growth on EBITDA, revenue and net income for the second quarter for Adnoc Gas. But a pleasure to speak to you this morning, Peter. Coming up on the programme, today marks the start of Dubai's trial of a 4-day working week. If you're hoping that your weekend might extend, this will be a conversation for you. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, if you've just got back to your desk and you're wishing it's still the weekend, here's a story for you. Dubai's 4-day working week with shorter working hours and Fridays off for public sector employees begins today. 15 government organisations are taking part in the pilot scheme this summer as officials strive to promote better work-life balance. I'm sure we could all do with a bit of that. Let's bring in our Mideast economics reporter, Abir Abu Omar. Abir, what do we know about who this applies to and when?
Lizzie, I know you're here for the next 2 weeks, but this doesn't apply to us. Yet, at least. This just started today. It commences on August 12th until the 30th of September. It's a pilot program under our summer. This is what Dubai sort of calls it. And it's one of those packages that really make Dubai, want to be this destination for all these people that are visiting. But some details about this program, it includes the public sector as of now, 15 government organizations. And I remember, Lizzie, a couple of years ago when we covered the story about the UAE changing its weekend, right? That was a big deal. This one is not as monumental as the weekend change because a lot of government entities already work 4.5 days. As you know, Friday is a holy day in Islam. So a lot of government entities break for the Friday prayers and then it's usually half a day. So this just changes the working hours to an official 7 hours per day on Friday, while keeping things flexible for government workers.
I mean, I just got here, but with this heat, I can understand why people would want a 4-day working week. Is it also to attract foreign workers?
Exactly. So that's one of the things that Dubai has been trying to do over the past couple of years. This is only one incentive, right? So we had a few years ago, or a couple of years ago, we had the digital nomad visa, for example. We have the golden visas. We have a lot of schemes to attract these people, especially people that can afford to work remotely. So Dubai is trying to cultivate itself as a capital for people that can work anywhere from the world. And this is just now, I know it starts with the public sector, but, we could potentially see the private sector following suit. We don't know yet. This is a program that's just for a month and a half almost. We're going to have to see what happens with the public sector afterwards and whether private sector companies follow suit. And then, you don't even have to look far. Dubai is following Sharjah, only 30 kilometers away, that has the 4-day work week.
All right, so this could just be the beginning. Abir Abu Hamawi, thank you for bringing us that story. Well, it has been the last day of the Olympics, the closing ceremony last night in Paris. What a spectacle. The United States at the top of the medal tally, the US winning 126 medals in total, 40 of them gold. But up next, we're going to be taking you to Europe. Daybreak Europe's coming up with Tom Mackenzie. He'll bring you all the latest from London. That's it for Horizons Middle East and Africa. I'm Lizzie Burden, and this is Bloomberg.